Hello, everyone. Thank you so much for joining this episode of the On the Mark Financial Forum and Podcast. We have a great guest today, Erin Dwyer-Busch from Senior Care Authority. Erin, thank you so much for joining us.
Thank you for having me.
Yeah, absolutely. Well, we met pretty recently, but we definitely clicked.
Yeah,
And I could tell you get what we do, we get what you do. And I want to bring more awareness to you and your company. And so why don't you give us a quick introduction for who you are, what you do, and how you got into the senior space?
absolutely. Erin Dwyer-Busch with Senior Care Authority. I have owned my company for 7 years now. My background is in speech language pathology. That's what I was doing prior until I took a little bit of a pivot. And the reason why is because a lot of my friends were going through this with their parents, just not knowing, should we keep mom at home? Should we go to a community? Which community? So that's why I basically, was like, okay, there's a need for this. There's got to be, experts out there that know these types of things. And I decided I wanted to be one of those people. And my team and I are senior care advisors, elder care strategists. That's another word we call ourselves. But we basically do residential placement, which means finding the right senior living fit. We do elder care consulting, which is, I could speak for hours about what we do there, but basically just very simply, we can do Medicaid placements and we can do stay at home plans, home safety assessments, that kind of thing, managing family dynamics. And then we have my pride and joy, which is the Beyond Driving with Dignity program, where this is where I wear my speech therapy hat. But I get in the vehicles with the seniors. I do a whole panel of cognitive assessments. It's about a 2.5 to 3 hour process. And we handle that very sensitive driving topic that doctors and families just don't want to, touch.
Yeah, that's a tricky one for sure. We went through it with my family recently, and someone's
Yeah.
back in the wheel that is fortunately in a better situation than they were a couple months ago. But it's treacherous, and it's a difficult conversation to have because I think so many seniors see driving in particular as a big sense of independence.
Absolutely.
Yeah, what's been your experience with that part of your business?
It's the favorite thing that I do. I love to give educational seminars on how to stay a safer driver longer because there are things you can do. But I've seen the whole gamut. I've seen a 56-year-old, not be able to drive because he had a massive stroke and was just not making good choices. And then I've seen 85-year-olds who were truck drivers the whole life that stayed active and their mind is sharp and they're good to go. So I've seen a lot. I've seen a lot of
Yeah.
things, but I love it just because there's really not a lot of options out there regarding the driving topic, and it's so state by state how the laws and regulations are. So you might go to Florida and it's, you can have your license renewed for 10 years, but you go to Illinois and it's only every 3 and you have to go take a driver's test. And in Missouri, you don't have to take a driver's test. You just get renewed. So there's not a lot of oversight for that.
That makes sense. And do you work with clients in different parts of the country, or are you more geographically restricted to a certain area?
The good news is this is a national company, so we're in almost every state. So I can refer and get somebody boots on the ground in the location where maybe the parent is, maybe the child lives out of town. But for the driving, I will do up to 2 or 2.5 hours away from the general St. Louis area because I believe it's very important and there's not a lot of resources for that. And then in terms of senior living placement, we just place over in the Missouri side. The rules and regulations in Illinois are completely different. So we just, are the greater St. Louis, St. Charles area. But again, like I said, if the family has a loved one that's not in this state or the city, I will find you somebody boots on the ground there that can help.
Yeah, that's great. And oftentimes we find that families are in different states. So you might have the adult children in one state and the parents in another, and that's when the driving becomes a little bit more scary. As the adult child of
Exactly.
my aging parents, that's tough because we can't actually see what's going on in the car. And we
Absolutely.
hear about things going on, a little scratch on the back of the car. I bumped
Yeah.
the,
Where'd that come from?
the curb. Yeah, oh, your car doesn't look so good. What's going on? Talk about
Exactly.
the holiday visit, and the car looks like you drove it into a river.
Right.
Um,
Exactly. Yeah. It's a
yeah,
shock when you see it, but
right, exactly. And they're not great at disclosing all that information because they don't, I assume they don't want people to know.
correct. Correct.
So what sort of trends are you seeing? I mean, obviously you've been in this space for a while. You saw a need, and I applaud you for that because we feel the same way. Like that's how we got into the senior space, just seeing a huge need for a huge population. And that's why we got into it, because there's so many people that need help, and it's so rewarding in this
Right.
industry when you can actually help a
Absolutely.
family and give them peace of mind to know that things are going to be okay. But what sort of trends are you seeing, either, with people's finances, with people's reluctance to move? Are you seeing people want to stay home more than be, placed into a senior community or facility? Like, what are you seeing right now?
Yes. Touching on the, do you see people that want to stay home? I would say 98% of people that reach out, their goal is to stay at home. And I understand why. The thought of moving just in general is very overwhelming. I mean, even if you're just moving from one house to another, an apartment to a house, it's very overwhelming. And the amount of items that they have, and they've lived in these homes for 40, 50 years. And it's overwhelming to think, oh, I'm going from a 4 bedroom to maybe a 1 bedroom, apartment. So that is the number one thing I hear is, I really want to stay home. So that's why I love what we do and my company can do, because we can look at it from all angles. If you want to stay home, great. Let's make sure that's feasible and safe. But if not, let's look at, what senior community fit. So we look at their finances. We look at geography. Sometimes it's a financial issue. They just can't keep the home. Or they need the home for the cost of care. So we have those discussions, but the trend is definitely people are staying home longer. So when they do decide or have to move, they're usually missing that independent living stage. Sometimes even assisted living is skipped over. So that means they're going right to memory care or skilled nursing. And the challenge with that is you're missing a lot of those social opportunities, those activities, those outings, and again, it's not a right fit for everybody, but we are still seeing people wait too long, and then they're acting out of crisis. And when you're acting out of crisis, we can help you, but your choices are going to be limited. You're not going to have the full range of, oh, I can do independent living or assisted living. You may have to go straight to skilled because you waited too long at home and your health declined or whatever. So definitely seeing that, waiting at home longer, and so we're skipping that independent living. The other thing is people want all levels of care. A lot of people want just this, I don't want to ever have to move again. And I caution people, I say that works for some people. Can you afford a buy-in? If you're coming in at independent living, that's a huge chunk of money. I mean, that's 2, 3, 400,000 or more, plus a monthly fee that you're giving to the community that you can't grow wealth on or interest on. So not a lot of people can afford that. But there is the nice, feeling that you won't have to move again, that you're in a community that will have higher levels of care. But the caveat is it doesn't guarantee that they will have an opening when you need it. So say, for example, you move into the independent living community, you put down, $400,000, you live there for a year and a half, and then you have a fall and, things happen. And then you're really more assisted living or memory care, but all they have an opening for is skilled. Well, they're going to move you to skill. And that's a restrictive environment, and you should be in the least restrictive environment. So some people decline. And so I tell my clients that, let's think about this. I'm going to tell you the good, the bad, and the ugly so you can make an informed decision. One size does not fit all. And, so that's what I'm saying. People are just like, well, I want that big community where I can get all the amenities and never have to move again. Is that the right fit for everybody? Not everybody, but for some, for sure.
Right. Well, and that's always the trade-off, right? Staying at home, you're probably a little more isolated. You're in your comfort zone, but you're not probably engaging as much as you would be if you had planned ahead and gone into this type of
Correct.
community.
Correct.
And you hit the nail on the head on our side too. We see people waiting too long, and the same exact thing happens on the financial side. If you're in a crisis mode, you have more limited options on the financing side as well. I couldn't agree more on that.
Absolutely.
Because if you're at a stage where, for example, you have memory care issues and you can't sign on your own behalf, those loan options are not going to look quite as attractive as something where, if you had done it a couple years earlier, let's say, where you still had all of your facilities, so to speak, the options would be much better.
Correct. And they're not having the conversations early enough. And that's why we try to educate and get out there and say, you can never start too early to plan. So we can't undo the fact that you didn't, buy long-term care insurance, or that you didn't pay off your mortgage, or that you didn't set aside money. But the earlier you can bring us in, the earlier we can work on this and try to see if we can free up some cash or, get the resources that can. The adult kids are usually gung ho, but sometimes their parents are, just, I'm sorry, my dog is barking.
No, your dog agrees. I love it. I'm a
I
dog.
know, my dog is like, I'm just loving it. So, they're wanting to have the conversation, but their parents are usually the ones that kind of put the brakes because, again, they think, oh, you're going to put me in a nursing home. It's like, no, what I'm showing
Yeah.
you are really beautiful apartments. So you're trying to break the stigma and have those conversations early. But most people haven't planned enough for this season in their life. I'm seeing fewer and fewer long-term care policies. The ones I am seeing are not the best. So we're trying to be creative with the financing and going, okay, are we going to have to get mom on Medicaid? What does Medicaid pay for in Missouri, which is not a lot? And those misconceptions that, oh, Medicare or Medicaid will just pay for, long-term care, assisted living, and you hate to burst their bubble, but,
Yeah.
and then they just look at you like, what do I do? And I'm like, well, you can move mom in with you. Oh, no, that's not going to work.
Yeah.
Okay, then, we
There's
have to.
another option.
So I'm not seeing, the proper planning involved. And so there's a lot of just shaken families where they can't believe that they're facing this and what the options really are at the end of the day because they don't have the financing.
Yeah, well, and that's one of the areas where we can come in and help people is to figure out how to navigate that. You alluded to this earlier about people being in their homes for 30, 40, 50 years. That's a common thread that we see as well. And people often think, we talk with seniors and their families and they're saying, gosh, I really want to move into X community or facility, but it's $2,000 more than the other one. We can't afford it. And what they're looking at is their monthly income from Social Security, maybe a pension or VA benefits or whatever it may be. And they're not looking at the fact that they could actually pull some of the equity from their house. And I think oftentimes people also miss the one of the most impactful things on seniors who have owned their homes for many years is capital gains tax.
Mm,
And they're not a lot of times the seniors and their families are not consulting the proper advisors like a tax advisor, for example, or an estate attorney, because they're thinking, oh well, I'm still alive, I don't need to talk to an estate attorney, I already have an estate plan. But what they don't realize that if you sell your home before the senior passes, there's a possibility, depending on how the numbers shake out, that you can have a pretty substantial capital gains tax bill. So
absolutely.
that's where, we don't overstep. We're not tax advisors, but we know when to raise a flag and say, hey, you need to talk to one.
Absolutely.
And
Same with
that's a
us.
common issue.
For sure, absolutely. Have
So
all those
yeah,
conversations, get your ducks in a row, know exactly what you have. The adult children a lot of times are like, well, my mom and dad are very private about, their financing and their health. And I'm like, I understand that. We can work through the financial advisor. They don't have to tell me the ins and outs. I just need to know a budget, but at some point you're going to have to divulge these things. Especially if you wanted to move into a community, because a lot of these require a couple years of financials. For Medicaid, they're going to want to see at least 3 years of bank statement. So you're going to have to provide it at some point. But our goal is to, protect that, but find you the best fit and conserve your money too. So we're fiduciaries and we do our best to make your money stretch.
right. And it's funny, you deal with so many of the same issues that we deal with on the financing side. Because same thing, people are like, oh, I don't want you to run my credit, but I want to know what loan I can get, or I want to, I don't want to give you my full financial profile. Just tell me what's the rate.
It's like, what?
Well, there's a little more to it than that, but let's take baby steps and we'll get there.
Right.
But oftentimes people just don't look at their home as an asset in the same way that they look at an IRA account or, an investment account where they're looking at slowly depleting those assets over time. You can do the same with real estate. And real estate is an asset and an investment. It's just a different form that you can use to leverage. And that allows people to be able to pay for care for a longer period of time, or maybe pay for a level up of care that they're ideally wanting to have. But sometimes the family dynamics get in there a little bit where the kids are,
Never. What are
the
you
adult
talking about? No,
children.
there's never any family dynamics.
It's like, well, that's my inheritance. Don't use that money. Well,
Right.
but this is what your parents are going to live off of, before you get the inheritance. Can't grab at that inheritance too early, or else mom and dad are going to end up in the basement somewhere, which nobody wants.
No.
But that's a common challenge we see and something we try to work through with families and whatnot. Do you ever hear of families trying to potentially take a reverse mortgage? Is that a
Yes.
common theme.
Yes, and we do talk to them about that as well, especially if it's done early on. You can build some cash value, some equity, because people don't realize that and they think it's a bad term. I akin reverse mortgage to hospice in my industry. It's like people just hear that word and they freak out. I'm like, just
Right.
hold on. Like I did too in the beginning, but then when you learn about it, it's like okay. But yeah, I do offer that up as an option. I said, let's talk to a professional, somebody who specializes in this, and what kind of value can we get out of your home? Whether, you sell it, you stay in it. Let's just look at all the options and see what there is for you. So,
Yeah,
yes,
for
we
sure.
definitely do talk about that as an option for sure. Reverse mortgages.
Yeah, and it can be a good one in certain situations. I would say, especially when there are memory care issues. Um, Reverse mortgages are more friendly to that type of situation where you have a power of attorney where somebody else is signing on your behalf.
Gotcha.
But when that's not an issue, there are other alternatives that most seniors don't know about. And we've had just a couple of cases this week alone where somebody called us and said, I've been proposed a reverse mortgage, and we looked at the terms. One of them would have required somebody to pay off a 3% mortgage with a 9.5% loan,
Wow.
and they had tried qualifying in different means and couldn't because they were going down straightforward channels to, they just called their local bank for a home equity line and they got denied, and they called another bank and they got denied, and it's the same process. But some of our products are specifically designed to be able to meet the unique challenges of seniors, which is primarily that they're not working, because banks
Right.
are very driven by income, and seniors, you're not moving into a CCRC community or assisted living thinking you're going to run a side hustle out of the out of the extra bedroom. You're past that stage. You're not earning in the same way that you were in your earlier days.
Exactly. You might have a part-time job or volunteer, but yeah, that high income earner, nope. But probably that ship probably has sailed.
It is sailed, yeah, for the most part. And if not, more power to you. But
Exactly. Yeah.
it's not very common. Not very common
Correct.
at all. But that's where the products can be really helpful. So this person that I was giving the example of, we ended up being able to get her approved for an equity line that was the same amount she would have drawn from the reverse mortgage, but she didn't have to pay off her 3% mortgage with nine and a
Nice.
half. And the
Nice.
rates were much better. But it was a unique way to qualify her based on both her somewhat limited income, but also the investments that she had that she wasn't going to liquidate. Just by having those assets, it allowed us to qualify her on a different basis. So,
That's great.
so there's some really creative things that we can do. So even for people who have been told, no, you can't do anything, reverse mortgage is your only option. Definitely call us. We're licensed in all 50 states. So whether you're on the
Love
Missouri
it.
side or the other side, we can certainly help people. But there are people like myself who do creative financing, whether it be reverse mortgages or other alternatives that most people don't even know exist. And so that's where we can come in, is giving people a very comprehensive view of what the options are. And it may be the reverse mortgage is the only way to finance your way through it. It may be that selling makes sense, but we'll always give people our honest opinion and let them know. But I think the biggest key is to make sure that seniors and their adult children are engaging with the appropriate professionals, like someone like you who has their best interest in mind, someone like us, a financial advisor, an estate attorney, a CPA, if your estate attorney is not comfortable answering some of those questions about taxes.
Right.
But those can be so impactful, and they're oftentimes families just operating in a vacuum and just
Right.
going to like a real estate agent saying, what can I sell my house for? And the good real estate agents, there are lots of them out there, love them to death. They will give you an honest opinion,
Yes.
but the idea is that they're there to sell your home. So if that's the professional that you're engaged with, that's what the service they're going to provide for you.
Right.
Whereas, if you have a big capital gains tax bill, for example, and we had one that unfortunately we learned about from the other professional about 3 months after it happened, but
Oh, no.
somebody paid $1 million in capital gains tax unnecessarily, rather than just financing for the last 2 or 3 years of care that they probably needed at 97 years old, could have
Gee.
avoided that. And then the goal is that the money goes to the family, not to the IRS. Sorry,
Right.
IRS.
Right. Now I'm with you. Yeah.
Sorry to them. No hard feelings.
Absolutely. Yeah.
Yeah.
I agree with 100% of everything you said. And I actually have a real estate agent on my team. And she splits her time between being a certified senior advisor like myself. And we have the, fiduciary requirement and duty, ethical duty, to make sure we, watch everyone's finances. And so she is one of a few people that I know that does both sides of it. And so she's always going to try to get the top dollar for the house, within reason. But, we love partnering with people like you that can figure out, okay, how can we get equity out of this home? Because at the end of the day, she just wants her client happy. And if they don't sell, they don't sell. That's fine. If they don't move, they don't move. If they stay, that's, okay. And if
Yeah,
they
for sure.
next time
And maybe it's a deferred sale. It's after the senior's out of the home or after they pass away. If they're trying to avoid capital gains tax, there's a huge potential benefit there if you hold on to the property, even if you leave it vacant. Sometimes it's better than selling it at the wrong time. And we've
right.
seen people sell their homes like literally in the last days of their life, and you're just throwing money away to the IRS just because you're not getting proper advice. So you and your team are unique in that you have both of those perspectives and knowledge of how these things work. But that's why we're here today, is bring more awareness to these issues and try to help people understand exactly what they're getting into. And there's so many things, and it's so overwhelming of a process just to be making a potential move, let alone thinking about all the financial implications of the things you do.
Yes.
And so that's where collectively a good financial and advisory team is going to come in very handy to make sure that you don't make any major missteps like some of the other families that we unfortunately learned about too late to help.
Well, prevent it from happening again. But yeah, it
Right,
definitely takes a village.
exactly.
I mean, it takes a lot of experts to work together, to peel the layers away. These families just don't know what they don't know. And they go online, they try to do it themselves. And it's like, please just use a real person, a real expert that can walk you through that. I'll give you two or three, get comparisons, vet them. Yeah, I can vet them for you, but you can vet them too. And, just really advocating for them and saying, look, let's look into all your options and make sure everything on the table so that you can make an informed decision. It's not my decision, it's your decision, but I want you to have all the education and resources and information.
Yeah, exactly. And hopefully they do good things with all those resources and
Right.
information. That part we can't guarantee. That's up to the families to do, to take
Exactly.
action, but we'll lead them down the right path. So Erin, I really appreciate you joining me today. I always end with one question. If there was one, no, don't worry, you'll be able to answer it, I'm sure.
I hope so.
And this is intentionally meant to not plan this answer, but if
Okay.
there was one thing you wish families would do differently or more regularly, more consistently, what would be that one thing that if you were talking to the broader universe,
Yes.
please do X? What is X for you?
That's actually an easy answer for me because I've been working on this in the legislative arm of Missouri's legislative branch, but it would be do not put your information in online. If you want to do research, please go ahead. Read as much as you can. But if you need to get to the next level to get a price on an assisted living apartment or to find out more information about amenities, and it requires you to put in your name, your contact information, your phone number, your email, all of that, beware because you get locked into something like that for 2 to 5 years. If you put your mother's information in, you're locking her in to an agreement basically for 2 to 5 years to be represented by one of these online, lead aggregates or just a community. You could be thinking you're doing research at a community and you don't get them, you're getting somebody else or vice versa. But even the community will lock you in and say, okay, you're mine. They basically own that name. So that's just my warning is I want everyone to research. Please do your research. Don't believe me, but don't put your information in because that really does sometimes reduce the choices you have, the ability to be represented by anybody of your choice. And then a lot of times these seniors are very upset that their daughter-in-law put their information in without their knowledge. That shouldn't be legal, but it is. So just be careful, when you're online, that you're checking what website you're on, that you really do know and read the terms, please. I mean, read the terms of those agreements before you click that box and say accept.
Yeah,
Yeah.
it's interesting because we see the same thing on the mortgage side. You have these lead aggregators. They're not actually lenders. They give the appearance of being a lender online, but what you're doing is you're putting your information in their database, and then they're selling that information to all of the various lenders who pay them to subscribe to their services to basically buy leads of people who are
Yeah.
inquiring about mortgages.
Same
Yeah,
situation with the
same
seniors.
concept.
Yeah,
Yeah,
it is. It's predatory and they end up getting harassed with phone calls. And the last thing you need is if you're dealing with your mom with advanced Alzheimer's or your dad that just passed away to get all these phone calls and have
yeah,
them spray your name out to communities that 9 times out of 10 are not the best fit.
right.
yeah, just be careful online. And then, the more information you're more subject to scams. And it's just be careful. Just use caution.
Yeah, for sure, especially in the days of AI that are here and still coming.
Yeah,
It's much easier to get misled or misinformed. So buyer
100%.
beware. Keep your
Buyer
information.
beware
Home.
for sure.
Awesome. Well, Erin, thank you so much.
Thank
I
you.
I would love to have you as a guest again. I think we've talked about maybe doing a panel where we can get people from all different aspects of helping seniors together and really raise awareness about all these issues. Appreciate you spending the time with me today to inform our network and hopefully yours as well about the great work that you're doing and the legislative work. I'd love to hear more about that as well on the next one. But thank you for doing what you do, and we will definitely be keeping in touch and trying to help people in the same way. It's great to meet like-minded people who really put the seniors and
Absolutely.
their families first.
We got to stick together. So thank you so much.
Absolutely. All right. Thank you. And thank you everyone for joining us on this episode of On the Mark. And we'll see you next time. Woof woof. Let's go. All right. Take care.
Thank you so much.